Hello, you're watching Spotlight Growth, a program that showcases emerging global growth investments and their innovative leadership. I'm your host, Leyla Gulen, and today I'm joined by Peter Goldstein. He is the founder and CEO of Exchange Listings, LLC, which helps private companies go through the IPO process to becoming publicly traded. Peter, it is great to have you today.
Hi, Leyla. Great to be here and excited to share time with you.
Absolutely. Well, first, help us better understand what Exchange Listing LLC does.
Really, to just hone in on our focus is we work with emerging growth companies, and those companies are either currently private or public, and we help to facilitate their access to growth capital with ultimately a listing on a senior exchange. So whether that's NASDAQ, the New York Stock Exchange, or the NEO, or other global exchanges, the goal is to work to facilitate these companies having an active listing and then becoming a sustainable company on a listed senior exchange.
How many companies have you successfully guided to becoming listed on the stock exchange?
Wow, there's quite a number, including some of my own, which I'm, going back many years. I've been in the capital markets now for about 20 to 25 years. And so I've been involved in a variety of transactions and taking companies public, both by way of merger, direct listing, IPO, Regulation A, crowdfunding. There's a myriad of ways that companies go public in addition to IPOs.
Yes, and I wanted to talk a bit about that as well. But first, in 2020, so there were 407 IPOs in this country. That was more than twice as many in the previous year. So can you give us an overview of the current IPO markets and what are your thoughts on that particular trend?
Wow, well, the markets are on fire, right? I mean, in Q3 of this year, we saw close to almost 100 IPOs, raising close to $27 billion. It's the most active third quarter that we've seen, since the IPO boom. So, in 20 years. And we're on track now for that pipeline to continue having a record-breaking year, here in 2021 amidst the global pandemic.
Well, it doesn't sound like inflation has much of an impact on IPOs, does it, or not?
The overall market, of course it does, but yet, the overall market is so robust now, and part of that is that IPOs are showing a great return. So investors are experiencing return, north of 20%. I think on average it's about 22% on IPOs that have come out. So as long as the market continues to show great returns to investors, the IPO looks to be very robust.
And what are the industries that you're seeing are really making an impact on the IPO situation currently?
So certainly, the technology sector overall would be first and foremost. I think behind that, would be the medical industry and then consumer goods. We've seen, very large IPOs in all three of those, technology, healthcare, and then if you combine the two of those, medtech is certainly a very hot space. Fintech is a hot space, but the three broad brush strokes would be healthcare, technology, and consumer goods.
And do you see the trajectory continue to climb? Do you see any potential for things to plateau, slow down in the near future?
Not at the moment, Leyla. The IPO market will certainly finish very strong. There's a very big pipeline for the balance of this quarter, which right now is our focus, right? We're focused between now and the end of the calendar year. Of course, the pipeline will continue to fill as long as the valuations and the access to capital comes with these companies and they perform well. We don't see any slowdown in sight.
Let's talk about some of the other ways that companies can go public. SPACs have been extremely hot and made up about a quarter of all IPOs during the period that we previously talked about, and they're growing in popularity. What can you tell us about SPACs?
Well, SPACs by nature, right, are an alternative way for companies to go public. So you have a group that brings either industry sector, capital market experience, or some combination thereof that takes a company public through an IPO process. And then their purpose is to go out and then to identify private companies to merge. So basically, in effect, taking a private company through the IPO process as an alternative route. And so, as you said, there's been a tremendous boom in the SPACs. They've been around for quite a long time. They just happen to have taken off in the last 2 years at a pace we've never seen before. And so once those companies are formed, Layla, then they have the challenge of identifying private companies to merge with. And that's where we are now in a lot of this stage of development in the SPAC market. So there's right now a bit of oversupply on SPAC companies that have been developed that are public that are now looking to identify private companies to merge with.
I see. And conversely, for the investor, are SPACs something that is attractive and one should put in their portfolios?
Certainly on a case by case, I don't give an investment advice, and that's obviously to the discretion of each investor. Typically, you've seen institutions that are largely behind the SPACs and the growth in the SPAC sector. And that's an opportunity for those institutions to kind of have a first look, if you will, at companies that are considered merger candidates. So you find now that there's a liquid market where a lot of traders or investors are looking at, and then there's the institutional component, which is more where the money stays in escrow until a deal has been transacted. And then they have the ability to include their money by their own vote and proxy of continuation, or they can pull their money out from that particular deal. So in a sense, a lot of institutions are participating because there's a lesser risk if they will participate in the SPAC without having a commitment to continue as a de-SPACing investor.
Okay. Well, if we can back up just a little bit. So for the novice viewers out there, what is the difference between the IPOs, direct listings, and SPACs?
Great. So SPAC as an acronym, right, for Special Purpose Acquisition Corporation, which is really a company that's gone through the IPO process and does not have any operations. So their business then is to identify a private company which they can merge with. And that is typically done around, it could be general, but either then usually a geographic sector, maybe it's Southeast Asia or it's some portion of the world that the company is targeted for certain growth opportunities and certain operating industries, or it could be industry specific. You could have a technology SPAC, a healthcare SPAC. I was looking at one this morning that was a REIT. So there's a lot of different focus groups of the SPACs that are then looking to bring companies public as an alternative way of reaching the capital markets. So that's the Special Purpose Acquisition Corporation. The IPO is more traditional, where you're taking an individual company that has its own operating history, and then that company has developed its route to go public through an initial public offering. So they'll bring in a banker as a lead underwriter, and then that underwriter will create a syndicated offering, and that offering will lead towards the initial public listing of that company combined with capital and then trading on whatever market they seek, whether it's NASDAQ, NYSE, or other.
All right. And then as far as direct listings.
So direct listings are coming on more and more popular. You've had now larger companies that are taking on direct listing, and that's really where it's an IPO of sorts, but there's no lead investment bank or underwriter. So for companies that have a very strong following, whether they have a subscriber following or shareholder following, following in the market that really is more retail oriented and individual shareholder oriented, where they want to take that on in their own right. It's a very bold, approach to going public, and it really is, I think, ideally for some companies that have had success by doing that because they have such a big following and loyal subscribers and shareholders, and the opportunity then to support the company in liquidation of their current shareholding and in support of companies that they believe in and they're a part of.
Can you give me an example of a company that used direct listings as a way of going public?
So Warby Parker was one of those recently that did that,
The
and it was a
eyeglasses,
very,
right?
very, yeah, yes, yeah,
Yeah.
great story. I'm wearing them now.
Oh,
I'm not a shareholder by
they look
default.
very good.
Just
They're very attractive
thank
glasses.
you, appreciate it, and great story. They were college. This was a college project that turned into a business that turned into a leader in the space. So it's just one of an example, and I think a great one of what's possible for certain companies to be able to affect.
Very interesting. And then, there's so many IPOs out there, but just to differentiate some of these companies, can you give me just an example or two of a company that went through the IPO process?
Well, just in the last few weeks, some of the consumer-oriented ones that we were following, there was a coffee chain. I'm a big coffee drinker and lover, so Dutch Brothers Coffee just went public.
Likewise.
Right, there was Weber, if you're into outdoor grilling and enthusiasts.
Yes.
These are names that are well recognized with consumers. So there's just a whole host of a pipeline, and then there are many names that, quite honestly, have been very, very new to me. A lot of those in the technology world. in the technology space. So as every day I'm reading about something and the markets are moving so quickly, things are developing so fast that the pipeline is really quite full and almost impressive to be able to just keep up with the number of deals that are coming out with on a day-to-day basis.
Yeah, so in other words, you're kept very busy.
Absolutely.
Oh, that's good. Busy is good. And we talked a bit about what makes a company a viable candidate for trading, or which industries rather are viable candidates for trading. And you had mentioned technology, consumer goods, healthcare. What does make a company a viable candidate for public trading?
So Layla, it's a really great question because there's so much that goes into building a company. I work with smaller to medium-sized companies. And so inside of when we're preparing a company to go public, there's a whole program for IPO readiness. And that typically starts, 12 to 18, almost sometimes 24 months prior to when you can actually make the listing and meet the listing metrics. And we break those down into two parts. So on one side, Layla, you have the quantitative part, which is the market cap, the valuation, number of shares, the value of the price per share, and all of the listing metrics that come to be able to be a company that would qualify for a senior exchange listing. And then there's the other side is qualitative. So there you look at your officers and your directors, and then you look at the corporate governance and all of the corporate governance components that requires independence. So that board of directors then is responsible for representing the best interest of shareholders and keeping management responsible to their fiduciary aspects of running the business. So we look at all of that components, and those are the mechanical aspects. And then there are just the fundamentals of picking a good company with solid management, track record, the key performance indicators of that industry, and the ability to see that they're going to continue to grow, lead towards profitability and return on investment for the shareholders.
And is that what you look for? So in potential clients of yours, you tend to look for that type of viability, corporate governance, as you say. Just in your career and experience, have there been many companies that you've turned away or discouraged from becoming public, and why?
Well, we work a little bit differently. I work lately with entrepreneurs. I'm an entrepreneur since my early 20s. I have a passion for working with entrepreneurs. And so we take it from a different perspective, which is each company at a stage of development that we work with has deficiencies or has deficits. And then we look to build a solution to those. So, for example, if they don't have an independent board, we would look to identify and attract and recruit board members, and then work with those board members to play a role in corporate governance, where they would fill, for example, an audit committee. It requires a certain background in finance and the financial markets, and then the ability to check the criteria required to be an independent board member. So for each project, we break that down into what are the deficits, what would the company need to do in order to meet the listing requirements, and then we take it a step further, which is to look at what would you need to thrive as a sustainable NASDAQ listed or NYSE listed public company from an operational perspective, from an organizational perspective, from a capital finance perspective. It's very, very, very dynamic. It's what I love about what I do is there are so many different aspects to building a company. And when you're public, you really have two businesses then. You have the business of your operations, your day-to-day, whatever that core industry and that core business is, and then the business of the capital markets. And that's where I love being able to work with and make my part of my purpose in my business, which I think every CEO should have, is to be able to make a contribution and have a purpose-driven component. Mine is to work with entrepreneurs to help them realize the vision they have of being listed on a senior exchange and to give them access to growth capital that can help them build their organizations.
Once a company has decided, okay, this is the time that I want to go public, they met with you, how long is that process, generally speaking, until they see their name on the ticker?
Their name on the ticker, that momentous event it really is such a threshold event for so many entrepreneurs, right, who have a dream and a vision of one day being able to be there for the opening bell or the closing bell or seeing their name on that ticker. And the answer really is, I'd say on average, 18 months. It can be as 24 months, maybe on the other side of the extension of that being a period, let's say from thought all the way through to planning, and it can be as short as 6 months. A lot of that depends on the stage of development, Layla, of the company. Do they have audited financials? Do they have their C-suite? Do they have financing? Have they reached a certain momentum with their business that would attract additional capital? So those are all things that we look at, and then we build a timeline that's customized to the business. Whether we work with them or any company decides to go public, they really need to have an understanding of the cost and the timeline for which it would take for them, and to be realistic. A lot of people have, especially entrepreneurs, so they have very lofty goals and wanting to move to market quickly. There's also always a variable that the market is dynamic in its own right. So if you have a certain goal and a timeline, that has to match up with the market, has to match up with the timing of the investment bankers, and then of course ultimately the capital that would come in to fuel your IPO.
Very interesting. Well, I guess it takes an entrepreneur to know an entrepreneur, and you yourself are an entrepreneur. So patience is key, and you're able to guide your clients in a direction where not necessarily to expect immediate gratification.
Agreed.
Right.
Agreed.
Well, if you could just regale us with just your start in business and how you came into this particular industry.
Yeah, I have to tell you, it wasn't a master plan to end up in this industry. As many entrepreneurs, you start down a path, and that path leads from one opportunity to another, and then a direction. I feel very fortunate to have found a direction that I just love and I'm passionate about. But I started in the food industry. It has absolutely nothing to do with the capital markets. And I was seeking a career in the restaurant industry at that time. I was young. I was in my early 20s. And I always wanted to be an entrepreneur. Since I can remember, I've always been, hustling to take on different odd jobs and, paper route and, shoveling snow and whatever it could be. I just always had the dream and vision of being in business for myself. And so in my early 20s, I started my first business, and it was in the specialty food industry in New York City. And I built that company from startup to a sale of a merger 6 years later, and I had my first successful exit, if you will, but learned a lot of lessons as a young businessman, especially in New York City, in a very tough industry, in the food industry and perishable commodities. But had my first understanding to go from founder to exit, and then from 30 till now, I'm 58. I've been working with emerging growth companies in different capacities as a founder, co-founder, investor, and then I started my own boutique investment bank. I saw, Layla, an opportunity for companies and entrepreneurs like myself to be able to provide value where there was not a lot of support from the investment banking community for small, early stage, the micro to small to mid cap companies. And so from scratch, I formed my own boutique investment bank. It was called Grandview Capital. I ultimately sold it, but I maintained my securities licenses and built the company. It's still active on Wall Street under a different name, but it's really where I learned about how financings work for small to medium-sized companies and what the investors are looking for versus the entrepreneur, and how to bridge that gap between the two. And then that led to mergers and acquisitions. And then I learned more about international. I have my master's in international business, but about bridging the gap, not just between two companies, but between cultural boundaries that existed by doing cross-border M&A work. That led into taking companies public, and then so on and so on. So now, some 25 years later, I have a breadth of experience and failures and losses. And it's really with that I can partner with entrepreneurs and management teams that want to go public and want to raise growth capital, because I've seen from most every side of that transaction what works and what doesn't work, and be able to try to prevent the mistakes that I made in my career and bring that value to other capital market entrepreneurs. The capital markets are very rewarding, and they're also very, very, very difficult to manage.
I can imagine. I can certainly imagine. We spoke about the trajectory of the markets, and things are looking pretty up at this point. I was just curious if you were to have a crystal ball, would you continue to see technology as being kind of leading the IPO trajectory followed by healthcare, consumer goods, et cetera, et cetera. Do you see anything else disrupting the markets at all?
I mean, technology on the headliners, I think technology and healthcare would be the safe answer there, for sure. And then there's derivatives of those two. So on the technology side, clearly fintech, is really, I think, going to continue to be a leader and very, very disruptive with just new platforms. Things are moving so fast there, Leyla. It's amazing at which new developments are occurring. And of course, then you add in the component of blockchain, you add in, the cryptocurrency side. And as we speak, things are changing there, moment by moment. So that continues to be very, very stimulating. And on the medical side, same thing there. If you just look at the advances that have happened in the last 5 years or in the last 10 years, with how amazing we've come from the developments that have occurred in the medical world, and then the ability to bring those to market faster than they had before. So we're seeing smaller, earlier stage companies to be able to accelerate coming to market, and those are the disruptors. Those are the ones that come with new energy, new entrepreneurial applications, new visions that before might take longer to develop because they didn't have access to capital or didn't have access to resources. But those two sectors are just moving so incredibly quick. It's really quite exciting.
That really is exciting. I've been learning more about blockchain and cryptocurrency just in the last few months, and it's fascinating because it is really still at its nascence and not yet on everyone's lips. But we've been down this road before in terms of technology, and here we are able to do just about everything on a single mobile device. So that's going to be a very interesting market to watch. One last question for you, and before a company decides to call you, Peter, what are the first steps that you would advise them to take before moving forward with taking their business public? You say, people, entrepreneurs, they have kind of pie in the sky, they're dreamers, but what should they really nail down before they even get on the phone to call you?
Yeah, I think you really want to nail down your business model and start with a real clear understanding of your business, what differentiates your business, in a sense, what makes it unique and special, and then to be able to forecast that out for the next 3 years. So what's your vision of your business? Put together, whether it's an executive summary or a pitch deck. I'm not a big believer in a 25-page business plan, but it's a condensed, communication of what is special and unique about your company and why it would be one that would do well in the capital markets. And then, of course, we then look at it and in dialogue with the entrepreneur is enter into a much deeper analysis and then understanding really to dig into the different areas we've talked about and see. For us, I love talking to entrepreneurs. So I invite entrepreneurs who are interested in engaging into a discussion about taking their companies public, or if they're already public and they want to move from a lower exchange to a senior exchange, really invite those same opportunities. That's a niche that we have that's very, very specialized to work with existing public companies to upgrade them, if you will. We did that one earlier this year that we're very proud of that we took about 2 years, but we took it through a Regulation A crowdfunding first. We used that crowdfunding, which was oversubscribed, to bring it into an initial public offering. And we took that, then the initial public offering, and went from the OTC markets to the NASDAQ. And so those are really unique opportunities to work with companies that are already public, but are ready for their own next stage of development. So for those entrepreneurs that are wishing to do so, I urge them to reach out. I'm very active on LinkedIn. People can look me up on LinkedIn. Of course, our website, which is exchangelistingllc.com. And feel free to send an email or send a LinkedIn message, and I'd be happy to engage.
Perfect. Peter, thank you so much. So appreciate your time.
Great, Leyla. Thanks for having me. It's been a pleasure talking with you.
Yes, likewise. And of course, if our viewers would like any more information, you can also go to spotlightgrowth.com. That's going to do it for us on this episode of Spotlight Growth. Thank you so much for watching, and we will see you next time.